Hi guys, so in this video, I'm going to talk about how I make my daily watch list. I'm going to start by giving you the theory and then show you practically how I go through my master watch list and pick out the few stocks that I'm going to focus on that day. So the process, just to remind you, is really simple. I start with my scan, look at the names that are generated on that TradingView scan, and add any that I'm interested in to my master watch list. I've covered the scan previously in a video, and I've covered how I add them to my master watch list in another video. This is the next video in the series where I talk about how I use this master watch list and pick out the 4 or 5 names that I'm going to focus on tomorrow and take trades on. So the setup that I'm looking for is super simple, and it's the most common setup that anyone trades in the market, and it is a flag setup. So essentially what I'm looking for is the stock to go up 3 to 5 days on really high volume. So something like this. So it just goes up, and the volume bars here would be high as well. And then it moves sideways or downwards for 3 to 5 days on low volume. So something like this, and the volume usually declines. There is absolutely nothing proprietary or fancy about this. This is the most popular flag setup that every trader trades, and it works. So I just keep it simple, and this is essentially the setup that I'm always looking for when I'm scanning through that master watch list. Now, let me talk about a few of the elements that increase the odds of the setup working in the order that I prioritize them. And the first is the stock should be part of a very strong industry group, sector, or theme. So in the scanning video, I showed you guys how I organize my master watch list based on themes, and that is the reason I do so. You might find a lot of flags in the market. Does that mean all of them have the same odds of working? No. The ones that are in the strong industry sectors and groups have a much higher odds of working than the ones in the weak ones. And just so you know, every flag can fail. There is no flag that is going to be a guaranteed success. So it's just the odds. Some flags have 50% odds of working, some would have 70% odds of working, some would have 10% odds of working. And obviously you want to take the flags that have the highest odds of working. So you just pick the ones in the strongest industry sector or group to do that. The second thing that increases the odds is the volatility contraction. Now, what do I mean by this? Two scary words, but actually really simple concept. So let's say that this is the stock which has made 3 bars up and has made this lovely pole. Now, the flag portion, if it just tightens up like this and is really not volatile, or it's contracting in a sense, then this behavior increases the odds of the flag working. So now this contraction could look a few different ways. So you could either have a pole where the flag contracts like this, which is this case, or you could have a pole where the flag contracts in this way. That's also a contraction. Or you could have a pole where the flag is contracting in this way. This is also a contraction. But basically, from something big, we're moving into a tight range. And the way I denote this on my charts is I add little white dots below the candles. And you'll see these in my charts. I explained how to add these to your TradingView charts in my chart layout video. So if you haven't seen that, please go there. These little dots show me two things. Either they'll show me inside bars, and what an inside bar is basically a bar that is fully engulfed by the previous bar. So this bar could be green or red, it doesn't matter. This bar could be green or red, it doesn't matter. It just means that this bar is inside this bar, right? Because the low is above this low and the high is below this high. So inside bars are denoted by a white dot below my chart, and tight range bars are the other one that I look at. And these are basically bars that have a range, and the range means high minus low, of less than 50% of the stock's ADR. Don't be confused by this. It's a very simple logical concept. Just hang on for a second. So ADR is your average daily range. So it just tells you how much a stock moves on average every day. Does the stock move 1%? Does the stock move 5% every day? Does the stock move 10% every day? So something like the SPY moves around 1% every day. A very volatile stock like Carvana moves around 10% every day. Now, if the stock on a particular day has made less than 50% of its ADR. So say, for example, Carvana generally moves 10% every day, and on a very particular day, it's only moved 5%, high minus low, or even 4% or 3%, then there is a tight day, a tight range day. And the way that I would see it on my chart is with the white dot below it. So I'm going to show you all of this when I actually do the scanning of the master watch list and prepare my daily watch list. You're going to see this on the charts and how I use it. But just so you understand, it's a very simple concept. All I'm trying to do is look for volatility contraction, right? And these little white dots are just visual tools that help these low volatile candles pop out for me. You can add them to your chart. You can remove them to your chart from your chart. It doesn't make a difference. This is just something that visually helps me spot that volatility contraction, which increases the odds of a flag setup working. Okay, so let's get back to the list. The third thing that really helps increase the odds of a flag working is a bounce of a moving average. So let's go back to our example. Let's say this is the pole. This is the 10-day moving average. This is the 20-day moving average. This is the 50-day moving average. Now, if the stock during the pullback touches this 50-day moving average and then breaks out the next day, this has a much higher odds of working. And why is that? It's simply because these moving averages are very logical support levels. So these are widely used by traders, institutions, algos, and a lot of people have their buys criteria that, okay, if the stock pulls back to the 20-day, I'm going to get it. If the stock pulls back to the 50-day, I'm going to get it. And so these become very natural areas of support. And when you see them bounce off that area, it usually means that buyers have stepped in and now the price will resume its uptrend. So if a stock is basically bouncing off its 10, 20, or 50 MA, then it has a higher odds of working. Now, in the same vein, if a stock is bouncing off a previous support area, then that also increases the odds of working. Now, what do I mean by this? Let's say we have a stock that went up, broke out, is pulling back, and now we're wondering, should we buy it? So this is the previous resistance area that the stock had broken out from. Let's say these are the 3 green candles from our example. This is the pole. And the stock has now made a small pullback here. Let's say the pole was, this was the whole pole. This was the little pullback. At this point, since the stock is bouncing off from this key support area, which was previously a resistance area, the odds of it working have increased. And why is that? It's because this is a very commonly traded price level for the stock and has been in the past as well. This used to be resistance. There were a lot of sellers here. Now the buyers overtook the sellers, and that's how it managed to break out. And when it pulls back, usually there'll be a lot of people who would say, okay, now that it's pulled back, I want to get back in. And then the stock ends up finding support there. So this is just another element that increases the odds of it working out. And the pullback to the breakout area is one of the setups that I really like trading. And the way that you can stack these odds in your favor is, say, the 10-day also coincides with this point, or say the 50-day also coincides with this point. If any of the moving averages also coincide with the point, now suddenly you've got two different elements working together and both increasing the odds. So this is how I like to look for it. I would want, ideally, not just one of these things, but all of these things to work in my favor, because that's going to increase the odds significantly. So say this was also a volatility contraction pattern, and this happened to be in the AI sector, which is a very hot theme. Then bingo, I've got 4 criteria working for me. So you can use these as a way to rank setups and decide which is the one that you want to get into the next day. Now, the 5th thing that I look for before I take any trade is the risk-reward ratio. So now let's get back to our old friend, the flag setup. Let's say this is the pole. This is our little pullback that has been created. Now, what I'm going to do is when I'm planning the trade for the next day, and you're going to see me do this live when I do my scanning for today, I'm going to calculate what is the risk of this trade and what is the potential reward for this trade. So now 2 things to make sure when you're looking at the risk. One is you want to check, is the risk less than the ADR of the stock? So say the stock has an average daily range of 10%. Let's take Carvana, for example. Then ideally, I want my risk, and the risk is simply the entry minus the stop loss level, this difference. So say the entry is at $100 and the stop loss is at $95, then my risk is $5, right? So I want the risk to be less than the ADR of the stock, or if I want a really, really good risk reward, then less than half the ADR of the stock. So in this case, since it's $5 and Carvana has an ADR of 10%, this is totally acceptable. This would be less than half ADR. That is perfect, and I would like that to happen. Now, the other thing is I want the risk-reward ratio to be greater than 1:3, which means for every dollar that I am risking, I want to potentially be able to make $3 or more. Now, how do I do this? On the chart, I'm going to look at where the next resistance level is. Now, this could either be a prior resistance from the candlesticks, this could be a whole number, or this could just be some previous level that has been very important on the chart. I want this distance of the reward to be at least 3 times the risk. And TradingView actually has a really cool tool. It's called long position and short position. I'm going to show you how to use these 2 tools to visualize this risk reward ratio. And this makes your trade selection very easy and logical, because you can prioritize the trades that have a higher risk reward ratio and leave alone the ones that have a lower one. So if this is a bit confusing for you right now, just wait until I show you how I actually do it. And I promise it'll make more sense. Another criteria that I use is if the stock is closer to the 52-week high or not. Say I have a whole bunch of stocks setting up for tomorrow, like 10 names on my watch list, and I don't know how to prioritize them. And all are part of the hottest groups with tight contractions, bouncing off moving averages and prior highs and really good risk rewards. Well, then I'm just going to prioritize the ones that are making new highs or closer to making new highs than the ones that are bouncing right off the bottom. And that's just because of the simple concept of relative strength. And the last thing that I would look at then is your what the type of candlestick is. So let's say in our example of the flag, this is the pole, this is the pullback. Now, if this last day is a hammer candle, which is a candlestick with a long lower wick, and is a green colored candle, because that denotes that it opened, went down, and closed way higher than it even opened, that is a strong reversal candle. So I would prioritize that. And in case you don't know what reversal candles are or what hammer candles are, then I would strongly recommend reading this book, Candlestick Course by Steve Nyson. It's super underrated. Of course, I have no affiliation with him, but it's just a book that really helped me a lot in understanding the language of candlesticks. And I don't think too many traders even talk about it and know about it. The only other one I know is Oliver Kell, who uses it. But it's fantastic and I highly recommend it. So these are the elements that I look at, which increase the odds of the setup working, and in this order of prioritization. What I'm going to do now is take you to my trading view and show you my master watch list, go through each name on it, and build my daily watch list for tomorrow. So pick the 2 or 3 or 4 or 5 names that look the best from it and plan these trades out so that tomorrow when the market opens, all I have to do is execute my plan. Now, my master watch list is a list that I share on my Twitter. So you can find the link there. It's updated daily, and it's the only watch list that I have, the only list of stocks that I look at during the day, after hours, and ever. So it has everything here. It starts with the indices and the bonds and the dollar. And these are things that I look at to get a sense of the market environment or to build my situational awareness. So in this case, we can see a small pullback on the IWM, which is healthy after 2 strong days up. DIA has just gone nuts, but it's showing no signs of pulling back. Every time the index drops in the day, the dip is bought, even the small dip was bought, even the small dip was bought. This is super bullish, very aggressive action. SPY, the same thing here. It's been so overbought. It's had a crazy run and it's just gone sideways, corrected through time rather than price. Dip bought here, dip bought here, dip bought here. And it's bouncing on the 10 MA, super constructive. Qs, very similar action. This had a bit more of a pullback and it's bouncing off this white line, which is the 20 MA. So that's even more constructive. And the dip was bought here. Look at this long lower wick. The dip was bought here, open was low. And this gap acted as support. It's held the entire time. So I actually took a position in the Qs today with a stop at yesterday's low. And this is looking very constructive to me. So my SA for tomorrow would be that the market looks bullish. It's had a healthy pullback and I would be happy to add longs tomorrow. I currently have 50 basis points of risk open, 25 in the triple Qs and 25 in NVIDIA. And if NVIDIA is close to being safe, it's close to 1 hour already. So I would be happy to put on another 50 to 100 basis points of risk. So that's what I'm going to be looking at in all of these names and see what's potentially setting up for tomorrow that I could take a look at. So Meta was actually a name that I took today as well. It just narrowly stopped me out before bouncing right back up. So this name has been finding support on the 50 MA. And if you zoom out, it's formed quite a large base for the past few months. Even on the weekly chart, it looks really constructive and looks like it's ready to start another long uptrend. So this is something that's definitely going to go back on my focus for tomorrow. And everything that I like, I just put a pink flag on so that those are my, that's my focus list for the next day. And those are the names that I look at the open rather than going through the entire master watch list. So Meta was another stock that did really well today. I should have had it on my watch list and I should have been long in it. This was a huge miss on my part because generally this is the setup that I love the most, the pullback, which retests the breakout area. And the only reason that I didn't have it and passed on it was because it didn't find support on the 20 MA, but it's definitely looking constructive now. And I do have, I guess, some indirect exposure to it now through the triple Qs. Google also had a really good bounce today. But this is not actionable tomorrow. So I'm just going to quickly go through the names, and then anything I do find actionable, I will stop at and tell you tell you why I find that very constructive. So Amazon, this absolutely should have been on my watch list today. This should have been the number one name, because look at the long base that this is breaking out of. This is almost a 1.5 year long base, where it's formed a really, really tight handle, and it's found support on the 20. Yesterday it dipped below and closed right above. Let me remove this long position tool that I'd created. And I should have been long this, absolutely. So this was a gap in my scanning yesterday as well. Sometimes I just end up making mistakes and my scanning is sloppy, and it's just something I got to get better at. Tesla, it was a very narrow range and did find support on the 20 and the 50 today and bounced, but I hate how it closed. So I was looking at this as well, but look at this long upper wick. I don't really like that price action. And in general, this has been a laggard off late. Just look at how beaten down it's been for the last almost 1.5, 2 years. So this is not a name that I'm interested in right here. I would rather have it go up a bit, so break out of this range, and then when it pulls back here, this is where I might be interested to trade this leg up. So that is how I'm envisioning it, and for now I'm just going to pass. Apple was the stock du jour, the big mover of the day on large volume, 2% move. This is what carried the cues. I absolutely dropped the ball on this one as well. Not too happy about it. Nvidia, on the other hand, is one that I did catch. It's up almost 1 hour now. So this one also bounced right off the 50. And while I didn't have Nvidia on my focus list in the morning, I did have the semis, SMH. And so Nvidia being the biggest component in that is something I decided to look at when the semis started to catch a bounce. And lo and behold, this was moving, so I took a position in this. This does not need to be flagged since this is already on my already in my portfolios. Now I'm going to look through the AI names. And the reason that I have these divided by groups is because I have found sectors, groups, or themes to be the biggest movers of stocks. And whenever I see a particular sector or theme start to move, I give the stocks in that sector more importance in terms of picking which one to buy. So for example, say I have 3 stocks, 2 are semi names and 1 is an AI name. And I see that all the AI names are green on that day, or most of them are, and AI is really catching a bid. Then if I were to buy one breakout, it would be from the AI group, for example. Okay, so let me go through all the AI names now. So SYM is actually setting up really well. This is a textbook setup that I look for. It's been surfing the 10. This was an earnings winner on this day. Look at the volume. It's like 10x or something, the average volume. And I think it's a relatively new stock because I've never heard of it before this. Yeah, it was like almost an IPO or a SPAC type of situation, it seems. Anyways, it's in the hottest group. It's setting up. Look, the volume is super constructive. There is nothing to not love here. So this is how I'm going to plan my trades. I'm going to put surround this candle with the entry here, the stop here, and then look at if there is any previous resistance where that resistance would come. And this stock does have very strong resistance here. So I would take a partial there. And this gives me a risk reward of 1:3. 3 is the number you can see here of the RR. And 3 is the minimum that I look for any trade. So if a trade is not giving me a risk reward of 1:3 or more, like 1:4, 1:5, I'm not going to take it because it's simply not worth it mathematically. And in this case, of course, everything works out. So the pink flag, and this is going to be on my focus list for tomorrow. Let's keep moving. Path looking extremely constructive, but very overextended. Again, since this is one of the EPs, I do have it in my IRAs, but I don't generally share my EP trades on Twitter since I don't think this is a setup that is appropriate for everyone's risk appetite. You really have to be fast in cutting losses. And I think only people with trading experience who know what they're doing should be doing this. Otherwise, stick to traditional breakouts. Snow as well, really constructive, but a bit too overbought. I would want it. I generally look for one of the moving averages to catch up. I don't like to buy these stocks somewhere in the air. So the minimum amount wants a 10 MA to catch up. So while these may be actionable and you might take them, it's just not a setup that I'm comfortable taking. So I will pass. Workday as well, similar setup. Upwork was looking really good 2 days ago, but got rejected, not setting up. Palantir, this has too much distribution volume for me to be interested in here. So no, not yet. DDOG, so this one you can see is going a bit, it's slightly down in the post market. And I think that's because one of the other companies similar to this, MongoDB, came out with a little bit of a disappointing result. Monday, again, was constructive 2 days ago, not anymore. And oh my God, look at the run on some of these. It's just, if you miss the EP, there's just no entry. Like this is not even coming to touch the 10 MA. It just keeps going every day. And this is what tells me the market is really constructive. Look at the bounces these stocks are having off the 10 MA. This is not action we've seen in a really long time. So this is the reason I'm willing to get aggressive and open more positions tomorrow. NetApp also looks really, really good, but it is somewhat floating in the air, and that's not a setup I'm really comfortable taking. So I'm not going to add to it here, though you can if you want to. The volume is constructive. Of course, I do have it in my IRAs, but I'm just going to take a look on the lower time frame and see exactly what's going on because I'm slightly tempted. But no, I'm going to stick with my discipline and pass on this. Because you know what happens in these situations is if NetApp actually fails and stops me out, I'm going to curse myself saying, see, I told you you should have stuck to your rules. And I don't want that situation. So I'm just going to pass on it. Duolingo is something I've been trying to catch an entry on, but it's a bit thin and it's not been making a convincing enough move for me to take it overnight. So I just keep buying it and then selling it at the end of the day at around break even. But I still want to look at it tomorrow because if the trade is still, if the stock is still opening somewhere here and I can get the stop below this 20 MA, the white line, I would be interested. And today was an inside day. So, which is denoted by this white dot here. And I explained what this was in the in my chart layout video. So tight days and inside days are just very constructive contraction signs. Like the price is contracting here and then it's going to expand. From contraction comes expansion. That's the basic idea. So Duolingo is going on my focus list for tomorrow morning. IoT, similar setup, got it in the IRA, not gonna buy it here, bit floaty in the air. Roku looks really nice as well, bouncing off the 10 MA. It had already bounced here off the 10 MA. And the second bounce off of the 10 MA is just too aggressive for me. I can't do it. But that's not to say it won't work. The market is so strong that it might just work. MongoDB had earnings after ours. You can see that here. And this is the post-market line. It's just come down slightly and finding support around here. This is where I'd taken my exit. This is where I had bought the stock. This was a really nice swing that I took recently. And I would be happy to take this again. Honestly, it's finding support at this area, which is a major support area, and it could just open here and go. And what makes me think that? Recent action. So I'm going to flag this here because I want to look at it tomorrow morning. Let me show you. This happened in ZS recently, where it opened here after earnings. This was a support area. It just went closed green on the day. The same thing happened to PanW. Yeah, this was post earnings, gap down. It's just gone on, made new highs. So this is just a recent theme that I've noticed, and this can happen in MongoDB as well tomorrow. So I've flagged it. This would be a stock and play that I would happily look at, because look at the big base that this is breaking out of, right? Check the weekly. This is a giant base, and this can break out of here. So happy to trade it as an AP if my thesis proves right. And my note here, DDOG sister, just means like DDOG is a sister company. And when this makes a move on earnings, DDOG does as well, which you can see here. And then when DDOG makes a move, then this makes a move as well. So it's good to know these things. And I always make a note of it on the chart. So in fact, on this day, 7th November, when DDOG had this massive earnings gap up, that is exactly why I took MongoDB 7th November, because this is a sister company and it would move in sympathy. And that is how this spectacular 5-hour trade played out. Moving on, ESTC. This, of course, I have it in the IRA as well. Bought it here, and it's just too far up for me to add here. GitLab, I am going to set an alert at the high of day, because if it does take off at the high of day, I would potentially be interested in this. The setup here is very simple. When it takes out the high of day, I enter with a stop at the low of day. It's basically day 2 of an EP. And although this didn't have a very positive move today and it closed below the open, the volume on this is insane. And the chart overall is so constructive. Let me show you the weekly. Let me remove all my alerts so you get a better sense of it. It's just an IPO based rounding out. This seems to have ignited a new move, and it could easily go up and reach its IPO highs. So I'm adding this as well. Actually, I'm not adding this. I'm just setting an alert on this because I only want to look at it in case the alert goes off. Otherwise, I'm not interested. Now let me take a look at the semis. So I already have NVIDIA, but I'm happy to add SMH. This one was on my watch list today as well and is super constructive. So I will keep this on the watch list. I would take an entry above today's high and take a stop at either tomorrow's low or today's low. And what I usually do is take SMH through Soxel. This is the triple leveraged ETF of SMH, but I don't do my technical analysis on Soxel because this is very distorted because of the 3x factor. So all the technical analysis should happen on SMH, and then you just use Soxel for the higher ADR advantage. AVGO is another one, but it has earnings tomorrow, so I'm not going to go through it. ARM is one of these IPO semis, which is looking so constructive and so beautiful. I was looking for an entry in this yesterday. It just didn't move anywhere, so I cut it out at break even. And it's gotten a bit wide and loose. If it gets tighter, I would absolutely be interested in this. That's why it's on my master watch list. Cybersecurity names. So Net, it's just gone without me. I was looking for an entry here, and it's just heartbreaking to watch it go without me. And this is not even giving much of a chance of a pullback. ZS does look constructive here. It's got 3 really tight days, and this could work. The volume pattern is very constructive as well. Let me zoom out a bit because I have a huge trend line here. Okay, so look at this on the weekly. This is a huge base and it's bottoming out and rounding on this base, right? This could be the start of a new uptrend. And this gives me a very nice stop at the top of this base, which would act as support. So this is the setup that I love the most. If I were to enter this tomorrow, look at how technically strong my stop would be. It would be a tight stop of 2.5% on a 3.3 ADR stock. And the stop would not only give me the 10 MA, but also this long-term support as a technical area of support. I hope that's making sense to most people. It's basically the stock has broken out of this giant base and then come back to test the breakout area, found support there, and is bouncing back again. And if I take the stop below that, it gives me a very strong area of support at my stop loss. So I love these kinds of setups. And yeah, this is definitely going to be flagged for tomorrow. CRWD, so strong, but so high in the air. I know a lot of people were looking at this and probably took it today, but it's just not for me. It's too aggressive an entry. Pan W, this could have been an entry today, but I would look for something a bit cleaner. I don't like this distribution pattern and the volume. And this one is so choppy. Oh my God. Dash. Oh, so I do have a position to in this. Yeah, I thought I got stopped out of it, but only in one of my accounts. The other ones, it missed me by a penny, thank God. So yeah, I'm still riding this position, partial taken. DKNG, I had a couple of nice swings in this, finally came all out. I don't see it really setting up here, nothing that interesting. So I'm just going to pass and move on. Williams Sonoma 2 extended, and I'm going to run through these a bit. Stone 2 extended. Melly, hold on, let me see it a bit better. So I definitely don't want to be here all night. Melly is a nice pullback to the 10 MA, but too extended for me. This has just gone straight up, and I don't see the edge in buying this here. Over, nowhere. Wing way too high. PDD, if I remember correctly, also not close to any moving average. I have it in my IRA though, of course. GPS, too much in the air. ENF, too much in the air. It's just gone straight up, and I don't see an edge in getting in on such an old trend. I might even take it off actually, because I'm never going to trade it. CMG, too straight up. With such a big uptrend, I would only be comfortable buying if it at least pulls back to the 20-day. So I don't want to take it here. Spotify, one that I missed. It's going off without me. And Shopify, also one that I skipped today for the same reason, but it seems to have worked. Kudos to anyone who did buy it. It's just a bit too extended for me, though I did like the fact that it found support on the previous resistance level, but still couldn't get myself to buy it. And as I mentioned, the reason for that is because if this failed in my post analysis, I would just be cursing myself saying, oh, you should have stuck to the rules, Mansi, what were you doing? And so I just think it's easier to skip it rather than yell at myself when I lose money on it. Okay, these are all the crypto, gold, and oil names. So I'm not really a fan of trading gold or oil because they're commodities and they're news based and you don't really have an edge technically. But they did kind of start running. So I just have an eye on some of these, like this Phillips 66 that made a nice move. And then crypto ones, I would definitely take. I totally dropped the ball on crypto. I got into Bitcoin and then I sold it at the end of the day because it didn't have enough cushion without holding any amount. And then the weekend, it just broke out and ran up and Monday morning, I was crying, thinking about my shares. But it's fine. C'est la vie. I will catch the next breakout. Builders and banks, these are those rotational group names that have just started running 2 days ago. So these are quite extended now, but they could offer a nice opportunity later. So I just have them here for now. And again, I do my analysis on KRE and XHP. And then if I were to play them, I would play them through the triple leveraged ETFs, which is NAIL and DPST. So this was obviously the buy point, which I missed. And now I just have to wait for a setup. And honestly, this market has been so hot. There have been so many names that it's just been impossible to catch them all. It's like, no matter how much money you make in the day, I end up at the end of the day just wondering, oh my God, I left so much more on the table. There were so many more breakouts that I should have been part of that I'm not. And yeah, I realize like it's a bit of FOMO, but it's just that there are so many good opportunities that Carvana is something I was in yesterday and I took 2 partials and I got stopped out of today. I don't really see it as a setup for tomorrow, so I'm going to pass on it. These are a bunch of names that are ripe for a short squeeze. So they have a short interest of like 20, 25, 30%, which is ridiculous, right? Because if they start running, it's a snowball effect. The more they go up, even more they're going to go up, because those 45% of shares that have been shorted need to be covered or will be forced covered by the brokers. So this is a good case in point. So I have this in my IRA as well. A firm, it started a short squeeze here. I have a very small position. I should have taken this in my trading shares as well. That's one of my biggest regrets from this year. It just goes, and the more it goes, the more number of people need to cover this short. So I haven't even taken a partial on this, like not a single partial, even though it's gone up, what, like, I don't know, 30, 40%, just because of the snowball effect. So AI is one that looks really nice for tomorrow. So this also has some ridiculous short float, like 20, 30%. And look at how tight this little pivot has gotten. It's a low cheat where it's surfing the 10, 20, and 200 MA. And if this starts going, I want to be on board. So I'm setting an alert somewhere here. And also flagging this because I want to be looking at it at the open. It's very close to the alert, so the alert might go off at the open anyways. Groupon also has a ridiculous short percentage, but this is looking more like a short to me. It's been rejected on the 50 MA, which is the red line, 2 days in a row, and it's made a very nice tight inside day. So if the market were to say gap down tomorrow or catch a bit at the downside, what I'm going to do is potentially take a shot on this. This would be at the top of my short list for tomorrow, because this looks really nice. Look at the distribution volume on this. And this was post earnings. So this could be a PED play, a post earnings announcement drift play to the downside. I love the double rejection of the 50-day. The only thing working against it is the high short interest. But the risk reward is pretty good too. Let me just test it. I can see that visually, but I want to make sure and show you mathematically as well how I do this. So up till the swing low would be a very logical place for me to cover my short. This is also the 200-day, which will act as a support level. So I'm getting a risk reward of 1:8, which is amazing. So this is definitely a short that I am considering. And if say the candle opens somewhere here and I take the stop loss as the high of day of that candle, look at what happens to my RR. I'm going to get a trade of 17R, 18R, 20R, something amazing like that. So this is definitely going at the top of my short list for tomorrow. BYND. I wish I could take this yesterday. It just wasn't liquid enough for me. So I had to pass on it. And actually, I'm just going to remove this from the watch list because there's no point looking at it given that it doesn't meet my liquidity criteria. I just had it here because 45% is a ridiculous short interest and it's just so ripe for a squeeze. It's insane. Okay, the last two names and then I can wrap this up. So for my shorts and my shorts watch list, I have TDD. I've been stalking this for quite a while. This just hasn't fallen down. The idea was the same. It was a feed play to the downside. This result just got the market completely off guard. It gapped down like 30%, only recovered a little bit that day, and it's gone up on very, very low volume. This is setting up again, but it's already come down a bit, so I don't like it as much as Groupon. And the RR is not that good either. It's only 1:4. So I'm going to pass on this. And if the market were to fail, I would just stick to Groupon. And the last is mini. So this one's already made its move without me. I had it short here and then covered it the same day because it didn't give me any cushion and I didn't want to hold something without a cushion short. And then the next day it just gapped down and the trade was over without me. And such is life. So that's it. Now I'm just going to go through the purple list and finalize what I really want for tomorrow. So these are just the three main indices that I track these days. So I always have them up here. And then Meta is one I'm looking at for the long side. Duolingo, only if it comes back to this level would I honestly be interested in. So that's a maybe. Zscaler looks fine as well. Sim, I went through what was looking. Yeah, this one has a good RR as well, 1:3, which is fine. Semis, I already have a position in, but if NVIDIA, I end up booking a partial in the morning, since it's already, more than 1 hour, I might take a position in the semis just to double down on that. MongoDB, this could be a stock and play, but since I already have quite a few names for tomorrow, I'm just gonna remove this because I don't want to focus on it. AI, I have an alert set for this, and I have quite a few names that are better than this. These 4 long upper wicks are something that are holding me back from this, and also the lack of accumulation volume. So I'm just going to remove this and then group onto the short side. So let me just make a separate section for the shorts. So I know in the morning where to look in case the market is suddenly going down, and I'll group on there. And then these 5 names will make it to my list of potential longs that I'm looking at tomorrow. And this is quite a big list. Usually I just have 2 or 3, but the market has been really, really good today. So that's the reason why I have. Yeah, that's the reason why I have 5 for tomorrow. So I hope this has been helpful in helping you get a sense of how I use my master watch list and then end up with a small focus list of 4 or 5 names that I'm looking at tomorrow, and also how I use that long and short position tool to get a sense of what the risk reward on a certain trade would be. If you have any questions, let me know in the comments and I'll do my best to answer them. Also, if you have any suggestions for me on how I could do this better, definitely let me know. But thank you so much for joining in. And sorry, just as a last point, I realized I might take ZS off my list just because of these 2 long upper wicks and I have better names. So I'm going to end up with these 4, and then Duolingo because it's a bit thinner than I would like. And my me buying it sort of tends to move that stock a little bit. So I'll just probably remove this and put this as a lower priority one as well. And so my top watches for tomorrow would be Meta, Sim, SMH, and Groupon short. Thank you so much. Bye.